4, 3, 2. Welcome to Taking Stock. It is a Tuesday, and the date is the 15th of August, 2023. I said it slowly because I've forgotten myself. And I'm joined by Cashmere John, but today he's gone with it's a beach smart city casual. I think that's the way. It's a very nice little beach. The sun's out, John. It's looking nice, and you're looking dressed up there.
It's nice. It's nice weather. Take advantage of it while we can.
Yeah. Lots happening. Lots of news out today. I thought. Yeah, we'll cover some of this, but wages have gone up. The price of milk, though, has come down. That's essential. That's what the Bank of England look at. Milk. They're obsessed with it. I saw Michael Berry short in the market. China cutting the cost of borrowing. And tomorrow, of course, that all-important UK inflation figure, which is, of course, the Bank of England look at that when determining policy. So we'll look at that. By all means, hit that subscribe button. Next week, I think we're taking a week off, and if we haven't got many more subscribers, we'll just quit this. So, so yeah. But John, anything you caught your eye? I noticed you did post out, I think, SEC filings, aren't there? This is where people discovered that Michael Berry, of course, famous for The Big Short, the film, excellent film, has sort of shorted the market massively, the NASDAQ and the S&P 500, and I think 1.6 billion worth. I put a survey up there saying he's obviously bearish. Where do you reckon the markets will be at the end of the year? John, what's your thoughts on it?
I mean, I'm sort of erring on the side of bearishness as we talked about yesterday. But I mean, this is a bold bet, a very, very bold bet indeed. And you might look at it and say, well, Michael Berry, he called it right before. Is he going to do so again? But then I've seen other criticism saying, Michael Berry has called 50 of the last 2 recessions, downturns correctly.
Yeah. He's not the actual genius. I mean, he did the mortgage market. Guy. Yeah, a mortgage market. Sometimes you only have to make one big bet in life, and if it pays off, you do well. And he did that with the mortgage market, of course, which is a very rare occurrence. He got it right. But he has got many things wrong. And if you read that article, I think it's on Reuters. He shifts his portfolio around quite a lot. It's more of a trader rather than a full-on conviction play and stick with it. Sometimes he comes off very quickly if he doesn't feel right. So I mean, that is in historic filing. So we don't know what his positions are now. It could have taken a bit off, but
he's a smart guy. I mean, you shouldn't discount what he says and does.
Yeah.
So I would pay attention. Whilst I perhaps wouldn't go out on a limb in such a way. I mean, what's he bet against? He's bet against the NASDAQ. He's bet against, the S&P. And we know that, sort of big tech, they dominate those indices. So I'm assuming that this is really a bet against big tech.
Yeah. And exactly, there isn't a lot, I mean, if you look at the NASDAQ here, this is the NASDAQ, and, that's all-time high up there. And if you scroll out, that was a massive rise. And so even though we had this sell-off, this bear market, it hasn't really come down a lot from where we are at all-time highs. So and the economy is not firing on all 6 to 8, 12 cylinders, whatever it is. So you could say, let's be honest, this has a bit of a relief rally of the Fed sort of getting towards peak interest rates. Terminal rate there, so and maybe that's what it is. And like you said, it's the big tech mainly. I think they make up now. 7 big companies are rallying, make up 50% of the S&P 500, which is huge. And so the rest of the S&P maybe not doing so well. So all you need is 1 or 2 of those big stocks to roll over pretty much, and they will affect the S&P, especially Apple. And in fact, you just posted something there, and it was Warren Buffett through SEC filings as well. Holds a big chunk of Apple, doesn't he?
I mean, it's worked over the years. I mean, you look at Apple's share price. That's been really a one-way ticket upwards from less than $20 a share to nearly 200 at its peak.
Yeah,
and that's in pretty quick time. So it's been a good bet. Apple, I mean, look back and, I remember tipping this at the Investors Chronicle, tipping it incidentally. I wrote.
Well, that's what made it rise, John. Your
absolutely. I tipped
it. It wouldn't have gone anywhere unless you tipped that.
So I submitted the tip on a Thursday or Wednesday, the day we used to go to press, and The following day, Steve Jobs died. So that's indeed
oh, my word.
the only obituary I've ever written.
Yeah.
But since the shares, they were cheap at the time. Apple was very, very cheap. I don't think anyone had quite understood, quite how powerful the sort of the brand was at that point. And obviously then there was a change of leadership as I can't remember his name.
Tim Cook.
Tim Cook came in. My memory's going. And the shares have just, it's been gangbusters ever since. So good bet by Buffett.
Yeah. Well, almost like Steve Jobs was the entrepreneur and the visionary that was but you think running of a business, Tim Cook's obviously done very well. Just slow iterations, not anything crazy. He's not the pioneer that obviously Steve Jobs is, but for day-to-day business running and keeping it sensible and consistent, he's the man, isn't he? So
precisely. The numbers the other day didn't look great. If you look at that share price graph, you've got quite a steep drop off in the wake of those. Apple shares are far from cheap now. You're talking sort of 30 times earnings, forecast earnings. And it's much the same story across big tech. Amazon's even more highly rated, but then it churns a lot of its profits or would-be profits back into investing. Nvidia, 55 times forecast earnings,
Wow.
These are highly rated companies. And, let us never forget that fundamentally tech companies are cyclical. If they're exposed to advertising, if they're exposed to consumer spending, they are cyclical. Corporate spending, cyclical. So yeah, I mean, I would heed this bet by Michael Burry, and I would also, then look at Berkshire or Berkshire's shareholdings, and just see what Buffett does with Apple.
Yeah, 51%, isn't he, of Apple? That's just the portfolio. He's got a lot of companies in there, but 51% Apple is quite a big chunk. Remember,
but the
thing is, he does talk about diversification. I don't know if he made that up, but talking about having too many stocks. But if you look at his, he does hold a lot of stocks, but I said 50% is in Apple, so that's not 51%. So that's a big chunk.
It's a funny old portfolio. Most of Berkshire Hathaway is invested in companies owned by Berkshire Hathaway. So
let's go to Matthew. Well done, fella. Well done. First to comment. Thank you very much, Matthew. And by all means, listen, comment below. End of year, the market, I mean, generally sort of maybe FTSE 100, 250, whatever, or even name, let us know, higher or lower. So we need to type higher or lower. Where do you see it going? John, do you think it's going to be lower or
lower?
Lower. Okay. Lower. I think it's going to be higher. I think we're going to get better in the UK because I think the UK is cheap. I don't think the S&P and NASDAQ will be particularly, but we're still lagging the US sort of inflation data. And so I think it's going to, in fact, what's it forecast to come in at? I think it's 6 point, what is it? 6 point, let's sort of scroll down a sec. It's 6.8 CPI is forecast to come in tomorrow. That's down from 7.9, so it's coming down to fair rate, considering it's up to over 11% at one point. So but we'll see. Okay, so anyway, Matthew says another boring company, but a steal. Be careful in the shops, stealing cards. But Card Factory. But when did you get into this? Because it's been running for a while. So we did cover Card Factory a while back.
We did.
Never got the lows at 30 pence, but lots at 50 and 60 have added. Last results at £1 and 2 pence. So let's look at the Card Factory chart here. Click it up here. Share screen. Yeah, a cracking run. And we talked about this saying, when retailers generally, are tarred with the bad sentiment, and there's one performing well, that's an opportunity. Sooner or later, the market catches on to the fundamentals, and it'll re-rate. And something. What I would say it's quite good, but it needs to get above that previous high there. I would say, otherwise it's going back down to retest this sort of area here at 80 pence level, but. It's
nice company. And
Yeah.
I think, as we discussed last week, there is the sort of last man standing argument here as well.
Yes.
Clinton's retrenching, and it's historically been a difficult market, but there's a bit of a turnaround story going on here, and it looks good.
Well, I would say there's the RSI there. The RSI peaked out at 78, 80 pence. It hit high up here on that, pretty much. It was like 112. Now it's struggling to get to that high, and the RSI is sort of peaking out. so it may have to exhaust itself, go right or consolidate for a bit.
Mm.
But there's a nice gap up there. May have to refill that gap. But yeah, card factory there.
Yeah, really. That's another kind of important retailer put some numbers out today. I say put out some numbers. They put out a very brief statement.
Yeah, what was this? Marks and Spencer.
Marks and Spencer.
Yeah, because there's almost people say it's a bellwether, I suppose. But again, you know, when people have written Marks off for a while here, but you know, we saw lows of 90 pence back in October, and now £2. Again, a multi-bagger. Marks is a multi-bagger. You know,
large companies that aren't always boring and can do well for you, particularly when, you know, as you say, they've been written off for dead, and you get a new broom in there who comes and starts making changes that significantly alter the course of a company's performance. You know, we know what's been going on. I mean, it's been a disaster zone for years, Marks and Spencer, particularly, in fact, mainly in its non-food business. Food has always been strong.
Have you seen that? Like for like food sales grew by 11%, and the like for like clothing and home sales grew by 6%. And they said there remain considerable uncertainties about the economic outlook, and there is a risk that the consumer market will tighten as the year progresses. Nevertheless,
they copied that of a card factory. I've literally just read that. So it's exactly the same. There remains considerable. It's awful. The outlook is, the consumer outlook is awful, but these numbers are good.
Yeah, they say expect profit growth and interim results to show significant, I always like the word significant, improvement against previous expectations. That's what's making them rise. So,
but I mean, expectations for Marks and Spencer's non-food business have been very low for many years. You know, and we know that they're sort of they're sort of shifting course. So they've shut a lot, or they have shut, or in the process of shutting a lot of their high street shops. And certainly the non-food side of things, moving into sort of big box retail, which seems to be the route that many are taking, and you know, it seems to be working. The problem with Marks and Spencer, you know, I heard an analyst once describe Marks and Spencer's as a sea of trousers, and you know, it's true. You know, you walked into it, and it's just an ungodly awful shopping experience. So saying
that, there's some people of a certain age love it. You know, it's always been a stalwart pretty much of a certain age, isn't it?
That's true. This is something I've always tried to work out. So, you know,
most of those people are dead now, though.
Well, this is the question. This is the question. So, do you get to a certain age and start shopping in Marks and Spencer's, or does Marks and Spencer's have to start catering for people who are younger and therefore change itself as they get to that certain age? It's funny. Do you start buying brown jumpers when you reach the age of 60?
Yes, I got a brown shirt coming in the post tomorrow now. Not from Marks and Spencer though. But no, do you know what? The funny thing is, I suppose as you get older, your tastes change anyway. So Marks going along, they're catering to that demographic in a good way. I mean, you know, there's not many people who get, apart from yourself there, Don, with your beach shirt, who get very trendy in their sort of 50s, I suppose. They start going the other way. You want more sensible clothes, don't you? You know.
But that's my question. Yeah. That's my question.
Jedi, a P6 Jedi says higher. He reckons the market's going. Steve A, higher. He reckons the market's going. Old dog, I replied to your request on Twitter this morning. RNS, have a look at EBDX. We're going to cover those anyway because they are one of the most read. Don't know if you've seen this yet. It's Abingdon, of course. Let's look at that. It's basically ABDX. They've done a deal with, haven't they? Tesco. I think it's these. We
got one with Superdrug already, but the news this morning was Tesco. Yeah. That's right.
It's called a salad-stick, and of course that's short for saliva stick. It's usually a spit stick. Let's call it that. Spit stick would be better.
Nice.
Yeah, more classy. But they say the launch of salad stick is for saliva pregnancy tests in 298 stores online at Tesco from late August, and online as well. But it says to be 12.5 million pregnancy tests were performed in the UK in 20. So I don't know what part of the market, but assuming that's a lot more convenient than having to go into the toilet and getting urine on your hands and stuff like that. You know, so I mean, with all you have to do is rub it on your mouth, inside your mouth. That's the way forward, isn't it? Surely. I don't know how. I don't know if they're the only one out there with this. Are they or not?
I assume they work. Otherwise, they wouldn't be able to sell them. So you know, it's good to, because again, we spoke last week about Novocyte and Amiga Diagnostics, and you know, all those companies that were big in COVID testing now having to find new revenue streams. So what you've seen here is again that sort of realization that COVID wasn't going to stick around forever. Although COVID is around. I know several people that have come down with it recently. So that there is still a market for COVID testing, although not quite as big as the one that it was before when the government was paying for them all. But these companies have to find new applications and so it's good to see that progress. It's good to see them finding a new path.
This was their interim results, by the way. Abingdon Health. They are about 13 million market cap. In a trading update there, they say revenue is expected to be 4 million, 42% higher. So is that for the year? Yeah. So it's not. I don't think
it's decent growth. It's decent growth.
Yeah, they're 3.2 million of cash, but still, that's what 3 times revenue sales. It's not cheap, really. And I'm going to say losing their interims. It's not particularly cheap. A reduction in adjusted EBITDA loss of 2.2. They are loss making, and so yeah. Not.
But you would assume that as they grow their top line, a lot of that will fall through. There has to be an operational gearing effect there. You would think from looking at very very quickly looking at the relationship between sales and profit. So if they can sell more of these tests and find new applications for what they do or new partners to sell their products, then yeah, you would hope that they get back to that net neutral position fairly soon.
Yeah. Okay. Just on my sort of how I look at stocks on a technical basis. If you look at the 50-day moving average, crossing that look, and then when it break a previous high, so previous high is pretty much up here, so. Broke up there. So you bought that at 7.23. They got to there 15, maybe a double, nice double there, and then maybe put a stop loss in because it's a bit volatile. Interesting to see where it goes from here, though, because when it gaps up like that, sometimes it's not sustainable. But that's good. The Tesco is a big market, so and I'd like to know what's the competition in the market for spit sticks, for pregnancy tests. Are they exclusive, or there must be other people doing this? Surely.
Well, you've got the traditional ones. Maybe people were more comfortable with the traditional ones. Doesn't mean just because there is a new product that everyone will use it.
Well, I wouldn't prefer to do that. Would you prefer to wheel the stick or spit the stick?
No comment.
No, I think definitely rubbing it on the inside of your cheek, and I'm talking about mouth cheek now,
no more detail on this,
is more preferable than to go in the toilet and try to win it. By the way, okay, let's look at the front page of Vox here. Let's see what's happening. There's quite a bit of news out here. So Instem, what do they do, John?
Picks and shovels for the pharma industry.
Okay.
So basically, they're a software platform that they provide a software platform that helps big pharma groups manage their drug development pipelines.
Yeah.
There's a lot going on in getting drugs to the market. A lot of data, a lot of information, process that needs to be managed. So having good tech platforms to do that is very, very, very important. And so again, this is the sort of business where you can imagine the impacts of AI will help them. It's about algorithmic type stuff, and they already work with lots of big pharma groups. In fact, most of the big pharma groups, it sort of has the feel of an industry standard, this product. So yeah, it's quite a nice company.
Yeah,
I must admit I hadn't really noticed it before, but as you know, I'm always on the lookout for picks and shovels. About 140 million market cap, I think.
Yeah, it's downtrend in the chart there. Rob from Norwich says, with M&S, I wonder now, with so much competition eliminated, but like Card Factory we're talking about, the competition is gone by the wayside, such as Debenhams. If there's a better outlook for the clothing, I will admit that after I hit 40, I did feel more comfortable going in there. yeah, exactly. You're in the club now. Welcome in. Welcome in there. But I the food is cracking actually, I knew that, but my wife's mother buys a lot of it and gives us some of it. So otherwise we wouldn't shop there. But
I mean, the other big retailer, obviously, just to finish that little observation about Marks and Spencer's next. Their numbers have been good recently, upgrade cycle. So that point about the last man standing, the removal of competition for the market, I actually think that's true. Remember, of course, as well, that the cost of living crisis has affected certain demographic groups more than others. So
people with no mortgages are, in the M&S more likely to be in M&S shoppers.
Precisely. So you sort of start seeing how the macro can feed through to business performance. That must have been a factor.
Yeah. News here: Atlantic secures partner to kickstart byproduct development. This is quite interesting.
Yeah,
it is one of the most read because previously it's not. I don't think so. When I talked to Neil, I've not heard him mention Felspar.
They did mention it in their last update.
Oh, did they?
They did, yeah. So this is kind of a rapid development from there. So it's basically a mineral that is a byproduct of the sort of spodumene, the kind of lithium ore that has potential uses, and in this case, they're potentially going to use this mineral and other minerals that are byproducts, quartz being one of them, to try and sort of breathe some life into Ghana's ceramic industry. So this is potentially useful. It potentially lowers the costs of the extraction process, of the lithium extraction process. But I think it does is it sort of really does it means there's less waste product. But it's also supporting another indigenous Ghanaian industry, ceramics. So this sort of puts a few ticks in the boxes of the ESG criteria, and you would hope, given we are seeing sort of some fears around the future of mining in certain African jurisdictions, and there was some chatter around this which has affected the share price. It positions them as a good partner for the Ghanaian government, and I think they were planning this anyway, but I think this helps.
Yeah, I mean, it's the metrics around this, but Keith there says that Keith and Neil, see, they're proper names, aren't they? The commercialization of Felspar at Awoya offers the potential. I don't know why I have to say it like that. I feel like I should say there. Awoya offers potential to generate significant, there's that word again, value to Ghana, in addition to the prospects of project lithium production. So be interesting to see the numbers on that.
You won't see them for a while, I suspect, because this is very much a new thing. But directionally, this is a good thing. A good thing for Atlantic.
I tell you who we had a request from yesterday was Gaming Realms. And GMR didn't quite catch sticker when I first but what's your thoughts on it? Have you looked at Gaming Realms at all, John?
I had a quick peek on the back of the request, and it's a steady grower. It's really if you're just looking at the numbers, turnover's rising, profits are rising, growing very quickly, valued relatively cheaply against the rate of that growth. I don't like companies in this sector. And when I say the sector, gambling, it's very much a personal choice, but I don't touch stuff that's related to the gambling industry.
Mark Blandford, the non-exec, is buying a bit of stock. He bought quite a few. He owns 4.3% of the company. He bought some here. So who else has been buying? Is that Mark Blandford? That's the share option scheme. But I did look at the pre-close trading update here a while back. The police confirmed that it expects to report H1 2023 revenue of 11.4, and I thought, hang on, what's the market cap? Okay, so it's about 5 times sales. I suppose that's again not cheap.
But it doesn't look cheap on that basis, but profits are growing really quickly.
Yeah, EBITDA so let's say the 10 million of EBITDA. That's 10 times EBITDA. That's not too bad, I suppose. If they're growing very quickly, that's not too bad. That's obviously decent margins there. But they're going. They are growing very quickly.
Yeah, I just don't like gambling. I mean, that's for 2 reasons. One is it's the sort of personal reason. I don't gamble.
Yeah.
I think it's a fairly insidious industry. I just don't like it. But secondly,
investing is gambling, really. Look at this.
It's not. It's not. But secondly, I just remember maybe many years ago, you saw a big rush into North America because gaming had been, and it's called gambling. Why do we call it gaming? It's gambling.
Exactly. They like the term.
No, they don't like telling it what it really is. But so you had this big rush into sort of a newly legislated gaming market in the US, and then it all sort of turned on a sixpence, and they changed their minds, and you ended up seeing UK executives being sort of extradited, for want of a better word. I think maybe even one of them was. I can't remember. So they got the rug pulled from underneath the industry, and now a lot of them are targeting growth in the US again.
Yeah, you've got to be careful of highly regulated, areas, because, like I say, it can change, and all of a sudden, your revenue company could halve overnight. It depends who you are.
There's a chap called Barney Frank. He was a US politician who basically did that.
That's right. Yeah. That's quite. Look at the chart there. You see the golden cross happened here nicely, and then you got high dipped. It's quite a volatile, but you can see high lows there, high lows, and then breaking out there. It's be interesting to get above that. It's trying to get towards those highs again, but who knows? There was one other
TMT. Yeah, TMT.
Do you know what they are? The investment company.
It's an investment company, essentially. Yeah, I mean, it's
investing.
Small tech companies, both private and public. So they've got a big holding in a Nasdaq company called Backblaze, which I had a look at. I mean, you can buy these shares for half of what their net asset value per share is.
Yeah, many investment companies at the moment are like that. Many of them,
not to that extent.
Wow.
That's
IPO,
very.
I think IPO is, which is quite a good. One of the big sort of companies that invest in all the sort of start tech. I mean, if you look at this, IPO is very similar, and Growth is another one. Look at that, very similar chart.
Yeah,
and Grow, I think, is another one. They're all into these sort of. Investment companies into the high tech
or tech capital is the other one.
But these are big companies, and so you can see the charts very soon. The issue is, isn't it? The cost of capital has gone up. Like I say, you can't miss. It's very hard now to misallocate capital. When cash was free and easy flowing and cheap, they'd invest in everything, and they could get lots of money for these startup companies. But now it's gone the exact opposite way, and so that's why it's taken a massive knock. So until it comes back in the market, they won't rise again. These companies,
That's exactly what TMT say in their statement. You're seeing a divergence. What does they say? An increase in divergence between the stronger and weaker performers. So, companies that are already performing strongly, that perhaps have more developed, are finding it easier to raise new capital than those that aren't.
Yeah.
So, and this would make sense if you look at the sort of proliferation of tech that we saw during the boom. The explosion of the unicorns. It was absolutely extraordinary. Went for virtually no $1 billion privately owned companies to hundreds and hundreds. They seem to there was a niche for everything. So I think the other worry, so investment trust discounts are broad generally, or are certainly wider than the historic average. But these companies that are investing in the racier end of it, the discounts are extreme.
But you can also say, again, be careful. How do they the valuations of these companies? What are you basing them on? Because they were valued a lot higher when liquidity and money was around and freely available.
Well, that's right.
So it's almost questionable. NAVs are very questionable sometimes. It's hard. That's why it's
100%. That is exactly why the discount exists. However, you have to look at the basis upon which companies like TMT value the companies within their portfolio. So you have to do a bit of digging to really see. The extent to which the discount is justified.
Yeah, and they will be, obviously, because normally the valuations are based off their last fundraise. And of course, the last fundraise is a lot higher. And of course, because now they're not going to get away as much of a valuation, or they're not going to even raise money at certain valuations. So, a lot of them have to discount. By the way, is John trying to reinvent himself with the snazzy shirt, the Madonna of the financial world? Yeah. And Jen, say, no, that's an M&S shirt. That'd be brilliant. Is that an M&S shirt, John? Admit it. They are looking at.
It's Ted Baker.
Oh, I say, it's Ted Baker. Actually, yes.
I've had it for years.
You wouldn't catch me dead in M&S, my friend. Any comments on recently listed cab payments holdings? I did see this. Are you aware of cab payments holdings?
No. I'll have to come back to that one.
Yeah. Well, have a look at that. But that's right, cab. I did see this somewhere. Cab payments. They are 642.
Big one.
There is a holding company for Crown Agents Bank, the main operating company that is trusted payments processing FX brands. Is a market leader in business to business, cross-border payments, and foreign exchange, specializing in hard-to-reach markets. I see a lot of this at the moment. There's a lot of this going on. In the space, you've got Argentex, you've got sort of Equals, or sort of similar. There's Cornerstone, which is a lot smaller. And in fact, today, what is about one of the most read is GSTechnologies, and they've acquired this PT Finance Limited from Canada, and they're talking about now they can do service all our B2B customers. We don't start onboarding customers. I was saying next generation of digital money solutions, and I think, well, hang on a second, feeling caught up in this digital side of it. We've had digital payments, digital cross-border payments for years. You know, when you get paid, for example, if you buy something from Amazon or anything or whatever, you don't use real cash. It's digital. Everything's digital. Every payment you make these days is digital. Unless you actually hand over cash to someone, it's all digital. I don't see the big hoo-ha about digital payments and Bitcoin will solve digital payments. No, it won't. Bitcoin will solve that because it's too volatile, and we already do digital payments. So what's the big deal? I don't understand it.
Cross-border stuff's a bit more tricky. It has been a bit more tricky.
You don't need crypto for that, though. There's all these crypto cross-border payments. First of all, crypto's not going to do it because it's too volatile. We've had sort of cross-border payments for a long time. It's not that hard. It's all right. What's the big deal?
Yeah. No, absolutely. No, it is quite interesting. That deal gives them a banking license, which means they can offer more services to more people. It is quite interesting. By the way, I've just realised my laptop isn't plugged in, so if I disappear off screen, that's why.
Okay, well, we're nearly towards the end. Just look at this couple of winners here. ESP, the only news on that is a seller. I think one of the original holders, Taylor Partners, or one of the big holders, has reduced to nothing. So you've got that. Like I said, sometimes a share price can rise not on buying, but the lack of selling. Once the selling dries up, even a couple of buys will push it higher. So that can happen sometimes.
But it's overhang. It's they call it stock overhang. So.
Yeah, exactly. And so it's all about. I mean, look what's happened here because of that. He stopped selling a couple of days ago. So no news on that really. But one of the rises were today. There was they're buying back. I don't understand this company. They're buying back shares, right? I don't understand where they are, but they got 200 grand's worth. I think share. You're a tiddler. Why are you buying back shares? I don't understand. You should conserve that money to develop the business, surely.
Well, how much money have they got? I mean, that's the question. You know,
Abingdon Health, Verditek, they're obviously into solar panels, but they've did a non-exec memorandum of understanding that forms the basis of framework to invest in new large-scale ultra lightweight solar panel manufacturing plant in southern Italy. It's been having a bit of a problem with that for a while, with finances and all that stuff. But,
well, it's been tricky. Producing solar panels in Europe has been tricky. You've had you had a fairly large solar manufacturing industry. It was Germany. Germany was a really strong market. That industry was hit because basically, China. It's dumping, they call it. So basically, China was selling Chinese-made solar panels into Europe at below cost. So as we got, there was something, there are geopolitical situations that are now occurring that mean reshoring production of things like solar panel from places like China is massively important. So if we can revitalize the indigenous solar manufacturing industry that we once had in Europe, then that's great news. We might find it easy to get their financing in the current political environment.
Yeah. By the way, this is CAB's chart since they IPO'd. Not pretty. So it's at 330, 255. So and Verditek, it's come off the bottom there. Verditek, but still not. Well, in fact, it has from 0.4 to 170. You realise that from the bottom, those technical bounces from the bottom. You can multi-bag on those. It's like, but where's the bottom? That's the trouble, If you start scaling in, you could be scaling for a long time in a downtrend. But let's come back to 1 pence there, a little bit of gap up and down. But anything else to catch your eye, John, on the front page or anything at all?
Let's go. What's it called? UP Global Sourcing. I've been having a little look at this morning. Haven't written anything up yet, but it's a company we mentioned a while back on our stock screening podcast. Okay. It owns homeware brands, Salter being the most well-known. Scales. Really strong results. They've basically sort of restructured this business to be more online focused, improving the sales mix, and it's really paying off. Really paying off. Very, very well targeted investment in sort of marketing and branding, that sort of stuff. Yeah, nice company.
Okay,
nice company.
Chart there? They've had a little rally to come back a bit. It's fine.
Yeah.
Cool. All right then. Let's have a quick look at the with the final look on the chart. Oh, by the way, just quickly on the like I said, fundamentally, or on the macro side, some interesting news here. Like I said, wage growth here. By the way, this is very important. I think almost more important than the wage growth, because this is showing now the price of milk and sunflower oil is starting to come down. And so starting to see Kantar said shop was paid £1.50 on average, £4, and milk down from 169. So it's going in the right direction. Don't forget tomorrow.
You say that. I mean, I'm gonna throw something out there. And I was speaking this morning to a credit investor. So they invest in corporate bonds, and particularly sub-investment grade corporate bonds. And they interpret this news, the news from the UK on wages, as bad news.
The bad news.
This is bad news.
But it'll drag there, because what you've got. First of all, it's a lagging indicator. But what you've also got is that unemployment's gone up. So that's ticked up.
Well, that's the balancing act. So the higher the unemployment, the less likely companies are, or wage demands are to be met.
I think but everything's focused on the wage growth, which is, so you may be, if you get what's the wage growth up by 7.8. Now, if inflation ticks down below that, then you're obviously getting a real-time sort of pay rise, which as yet it hasn't been. But the thing is, if the UK labour market is easing up a bit, then those wage increases won't continue to happen. And if inflation comes down, they won't continue to happen, because you can't keep saying, oh, you're going to get to 8%, when inflation is at 6.8%. So I think this is good. But anyway, we'll see.
I guess the point. Tomorrow. I guess the point that this chap was making, and it's important, is credit managers. Inflation and interest rates are all important. They set the benchmarks by which these companies can generate their risk adjusted returns. He said they cannot call at the moment definitively where they think inflation is going to be. Because you have data like this. We had oil and gas prices coming off quite strongly over the year, but they've started to tick up again. All he said, and I would urge everyone to consider this, is that it's not over until the fat lady sings when it comes to inflation, basically.
Yeah, but she won't be as fat. She can't afford to buy so much food. But in fact, the bond market didn't like today. Didn't like the wages going up, because that's gone up to above 50. It was dipping down below 50 moving average. Now it's dipped up above that. That's the previous all-time high at 5.5, and so it has gone up. That's reacted to the wage figures rather than the food figures. So anyway, wages out. This is quite worrying. China has stopped releasing youth unemployment figures. They're so bad, pretty much. They've stopped releasing them. Oh, that's transparent, China. Because they're so bad, we're not going to release them anymore. It's like, hopefully people ignore them. But that's
I was reading today they've stopped. This is one of the government statistics that it stopped releasing. It's stopped releasing thousands of government statistics in the past few years. And this again is worrying, because China is such an important cog in the global machine. And we don't know what's going on there.
I've seen a couple of people on Twitter.
I'm gone.
Okay, I'll say, John's gone. I'll finish off. A couple of people on Twitter saying China is panicking. They're reducing the interest rate, the policy rate. Anyway, John's not plugged in. He's gone. His battery's gone. Right, Jedi, thanks for that. Any comments on? We'll look at that tomorrow. And Equals has been a good investment for me. Yeah, done very well. They're called the Fairfax, and I know Equals very well. I've been preloaded their cards. Thank you very much for all the comments. By all means, listen, if you haven't hit that subscribe button, please do it. Because we're going for a week on holidays, and if those numbers aren't up, we're not coming back. But if you enjoy this, hit that subscribe button, please. And could you look at East India? Wants to be new 50. We did look at the IESB just then. That's what the ticker is. But we'll look at that tomorrow. Thanks very much. I'm running out of time. And speak tomorrow. Bye.